Hello Archers, my name is Kurt Van Wagenen. I am the owner of Archer Financial Consulting and I'm a financial advisor here in the state of Texas. I wanted to put a series of videos together to talk about the basics of financial planning. And where I normally would start with a prospect or a client is what we would call the financial house. And the financial house is just a basic guide to kind of give the prospect or a client some basic ideas of where they're kind of at and where they want to go and establish some goals. So this is the ground. We start with the foundation of our financial house, which is the most sturdiest part of the house, the strongest part of our house. And our foundation is going to be built around different types of insurance. So life insurance, disability insurance, long-term care, and medical insurance. And we'll come back and touch on those different topics. But we're going to talk about the rest of the financial house. The next level of our house is very important. It's our emergency savings. Our emergency savings, we want to have between 6 and 12 months. And if you don't have 6 and 12 months worth of emergency savings, we can talk about some alternatives, some different products or different things that we can put money into to build up our emergency savings. Or if you have something in place, we can talk about how we can use those different products to enlarge or make it safer or better. So the next level of our financial house is going to be the largest floor of our financial house, and that's going to be our retirement planning. So retirement takes up a large amount of our money over the longest period of our time in our life. Those things revolve around different products like IRAs, 401ks, even set plans, just to name a few. As a few examples, we can talk about your current IRA, your 401k, what it's doing. If you have some old ones that aren't doing anything with old businesses, and how we can really maximize this. Not everybody is going to use the next level of our financial house, which is college savings, but it is a part of our financial house because parents need to plan for putting their kids through college. The younger we start with our children, the more money that we can grow. So college savings is important to plan for. The final level of our financial house is what we call speculative investing. This includes things like stocks, crypto, just to name a few. Different investing products that are out there. Believe it or not, when I speak to a lot of people, they are already doing speculative investing and they haven't explored the different levels of their financial house, or it's never been brought up to them that they need to put money in these places before they start speculative investing. And speculative investing should be the last floor of our house that we should be putting money into. And we should really be concentrating on the other floors of our house in order to keep our house from collapsing. So I like to talk about age when it comes to costs, okay? Because as we get older, it becomes more expensive to enter certain levels of our financial house. Regarding like the entry costs or the initial costs or the buy-in costs for like insurances and different things. So the younger we get started on our financial house, the cheaper or the less cost it may be for you to get started. Another thing I like to talk about is risk. Okay. The level of risk also climbs as we go up in the different levels of our financial house. Speculative investing being the most risky, okay, whereas the insurance is the least risky. The reason being is that the insurances are backed up by companies, whereas your speculative investing is being subject to market risk. And in between these, there's different levels where we can put money into that may not be of any sort of risk or have low risk, right? Or it may be high risk. So it just depends on what your goals and what you're looking to achieve. So what would cause your financial house to collapse? Okay. If your financial house is doesn't have the proper insurances in place, life insurance is going to protect you and your family in case you were to, God forbid, pass away early, and your family may have to start using the different levels of your financial house to pay bills if you don't have the proper life insurance in place. Disability insurance is going to protect your income. If you were to get into an accident or something and you were out of work for example, like 6 months, and you needed some short-term disability, are you going to have those protections in place to keep your level of income where it needs to be? Long-term care is something that a lot of people don't really think about, but as you get older in life, you may come into a situation where you may be sick or may be dying, and you need a long-term care situation. And this type of insurance helps you for the final years of your life. And, when you're young, you don't really think about these things, but these insurances can become very expensive. The older you get, the longer you wait to get them. Medical insurance, we usually get this through our employer, but there is medical insurance, different types of vision insurance, dental insurance on the market. And if you have questions or looking to get into something that you can't get through your work, or you're self-employed and you're looking to get on the market to buy these things, it's something we can talk about. So this is the basic financial house. This gives a basic idea for someone to kind of think about their current situation and develop some goals where they want to go. If you'd like to speak to me, you can reach me at my website at archerfc.com. There's a link there to connect with me, to get on my calendar, to talk to me. I'm on Facebook. I'm on LinkedIn. I'm also on Twitter and Instagram as well. I'm looking to connect with young people, older people of any situation. Give me a call. Let's have a conversation. But this is your financial house, and I just wanted to leave you with where are you at in your financial house.